SoFi's second quarter results were out this morning, and we're going to find out from Anthony Noto, who's the CEO, that the numbers are really great. We want to see if the stock will react to it because it's not reacted to the last two times that they had good numbers. Anthony Noto, welcome back to the show. How are you doing?
Doing great, Jim. Thank you for having me. Hi to you and David.
Yeah, I got David here too. All right, so Anthony, explain to me how you can have such extraordinary numbers. And why do you think that the market's not reacting to the fact that you're 40% now, like of a software product that's absolutely terrific? You have a declining number of charge-offs, which is really amazing at this point in the cycle. You've got people, a huge number of people have signed up. When will people realize that you're going to have a breakout of tremendous proportions and go ahead of it? Or do they have to see the real breakout before they realize, holy cow, why didn't I buy that stock?
Yeah, I think this quarter is definitely a milestone quarter. When people sit back and do the work, they'll realize the magnitude of the transition we made. We had record revenue, as you know, almost $600 million, up 22% year over year. That would have never happened without us driving diversification outside of lending, which only grew 5%. The financial services sector grew 80% year over year, and it's driven by both 40+% product growth and 29% growth in revenue per product, both of which will continue to propel the growth of the overall company. So we've made a transition from risky, capital-intensive lending business to higher return, less capital, less risk financial services business. That's been happening throughout the year, and without the scale that we've achieved this quarter, we'd have never gotten to another quarter of record revenue and really strong improvement in profits and some good underlying trends, as you mentioned, in lending, which is optionality on rates coming back down. I think in terms of the stock, I think it's just a question of where rates going, where the economy's going, because people feel great about the results. Now they're worried about what's going to happen next week, what's going to happen next month with rates and with credit overall. We did also point out that we saw an inflection point in our delinquencies for personal loans, which is an important milestone as well.
All right, do you think, Anthony, that there's the possibility that people still remember the heritage, which is student loans, and they say, as President Biden forgives student loans, I can't own SoFi stock?
I do think there's a legacy of us being predominantly a lender. On the earnings call, as a matter of fact, we had analysts ask questions. 99% of them were about lending. There was only one question about the financial services segment and a question of whether we could sustain the 80% growth or not. And I talked through product growth of 40% and revenue per product growth of mid-20s to 30%, which there's still a lot of upside in both of them. And their focus continues to be on the thing that we used to be as opposed to the thing that we've become. And we're trying to emphasize the magnitude of the innovation we're driving. We've rolled out alternative assets, which helped us drive 58% growth in AUM and brokerage. In addition to that, we're providing auto, home, and life insurance. Our credit card business is starting to make a turn. And so we're seeing really strong trends outside of the traditional lending business. And it's going to take a while for people to accept that that's the driver of growth going through the rest of the year.
Well, I think that's really important. I mean, you do allude to the fact that you are becoming the AWS of financial services. And Anthony, I've known you for a very, very long time. And I thought to myself, when are people going to recognize that this is actually an enterprise software company that caters to individuals, not individual borrowers, but individuals? And why is that so hard? Why can't people see that it's enterprise software?
You know, I think it's just a matter of people hearing the metrics over and over for the first time. So today was the first time we talked about our interchange revenue, which is growing very nicely. We also, for the first time, started to break out the growth in AUM, as well as our non-interest income and financial services, which ties to those two numbers. And they're much more transactionally driven without a lot of risk, and they don't require capital.
Anthony, finally, just on the macro, obviously we don't expect we're going to get a rate cut tomorrow, but we do, or many expect, that we're going to get a rate cut come September. What's that going to mean overall for your business?
A declining rate environment is positive for our business. It will definitely be a tailwind. It'll increase the amount of home loan refinancing, which we're now in and doing quite well. We saw a very strong trend in home loans, up 71% year over year. We're now also doing home equity loans, which is a good diversification because it's a secured product. So both those businesses would benefit from lower rates. Student loan refinancing, to Jim's point, there would be a lot more demand for student loan financing because the rate they currently have relative to a lower rate, benchmark rates, would give them more of a savings. And so it would be a tailwind there. I also believe we'd see a tailwind to our invest business, which is also seeing great growth in AUM. But as people have less yield in money markets and fixed income, they're going to have to go back into equities as a higher percentage of their portfolio. So that business would also benefit. And then last, the value of the loans in our balance sheet in declining rate environments generally increase the value, all else equal, in the loans.
Right.
Well, look, Anthony, again, people call in all the time on Mad Money, and all I can do is talk in praise. You're doing exactly what you can do. It must be frustrating to be you, but I want to thank you for coming on Squawk on the Street and always telling it straight.